Set to speak this afternoon to economists after the market close. How would you rate Mr. Bernanke's communication with the markets lately?
Well, I mean, clearly it's very, very important. I think there's been some misinterpretation. For instance, Bernanke spoke at a press conference after the June FOMC, which is the meeting that we'll get the minutes for today. And he did suggest that the downside risks to the U.S. economy were becoming more limited. He said that growth would speed up into 2015. Neither of those things, I would say, are that different to the market consensus. And yet, on the back of that, many people interpreted what he said as hawkish. Well, actually, I've read what he said several times now, and I see those remarks, the whole of his remarks, as being pragmatic rather than hawkish. So the market, I think, saw what it wanted to see. It was thinking about tapering. I think it got ahead of itself in talking about tapering and the U.S. recovery. There are still headwinds to the U.S. recovery. There is still fiscal consolidation. There is still slower growth in China, the recession in the Eurozone. That will impact the U.S. economy and Bernanke's thinking. There is still fiscal consolidation, of course, carrying on in the U.S. So it's quite possible that Bernanke will speak in still some dovish tones, even if he starts to taper in the next few months or not.
Take that, markets. Mr. Bernanke is being pragmatic. Jane Foley is senior foreign exchange strategist at Rabobank in London. Jane, let's talk a little bit.
Okay, hello from Sunnyvale, California. I'm your host, Mark Vieira. Going to take you on a little tour of just some basic, analysis. I'm looking first off here at moving averages. Okay, we're getting back to a rising moving average. We had the 20-day slip below the 50-day, and now it's not crossed above the 50-day yet, but our longer term, intermediate term moving averages are still rising. That's all I really want to look at really from this right now. And moving over to the shorter term averages, we have the 5-day crossing above the 9 and 20-day, and of course we can see the parabolic move that has ensued. And I just want to stop this, switch over to how we did for the week. Up almost 3% for the week, and oh my goodness, 17% here. I'm looking at Q1 10%, Q2 another. That's over 17%. We're only half the year in. We're just a few seven handles from the 1687 high. Last year we were up 10% for first quarter, down 6% for the second quarter. So that's about 4% half of the year. There's a 13% difference in this, and there's just I don't think that that's a good sign. I think that spells it's an equation for correction, especially when I'm looking at other fundamental values that I go more into my trading log. You can read down at the end of the section in there. Let's just switch over real quick here. This is the end of my trading log. Let's scroll up down towards the end, and I've got to update this. I want to throw in some more links, but you can check out this is it right here. This is my S&P to US dollar comparison spreadsheet. But if I click on that, that's going to open up. There's the chart down here at the tab. Anyway, that's how this is a multi-purpose spreadsheet for me, and I'm keeping track of the percentages, so you can take a look at that if you like. And moving on. Okay, moving on from there, taking a look at the pattern worksheet. Last video was way too long, so I want to try to pause this and switch over to sheets, try to speed this video up a bit. I was looking at symmetrical triangles, and it was just becoming a mess, so I deleted and I cleaned up a lot of stuff out of here. And to go over of just a few things. Main event I was looking at was this symmetrical triangle, which we just blazed right through. And we're getting to some Gartley percentages now. I'll move into that later. So had an inverted head and shoulders, broke the neck, we broke the symmetrical triangle, and pretty much meeting most targets on these on most of the patterns. Still looking for targets on some of the other ones. And in parabolic mode like this, you're not going to find, until we start getting some kind of churn going on, we're not going to really see too much in terms of patterns, and just nothing bouncing out at me in terms of candlesticks either. You know, this parabolic run, you can't question parabolic. You can't predict it. It's going to end badly. Everybody knows that. But where is it going to stop? Good luck trying to figure that one out. So, it's taking Gartley's pretty rare, and it's interesting to find these. But I measured the fib retracements on each one of these legs, and this is pretty much a textbook Gartley. Now, the theory in Gartley says to reach point B, you have 97% chance to get to this point, and then you got a 64% chance here, and 52% chance to get to here. So just just above a coin toss, and here we are. We're almost reaching, potential double top. One of the things I want to point out with patterns is they're nice to look at. If it reaches here and maybe pulls back a little bit, you'll hear people saying, okay, double top, double top. But the truth of the matter is the double top doesn't go into play until it breaks a confirmation threshold, which is actually down at the valley. So on a double top, you would measure between the peaks and the valley, and you'd subtract, and then that would get your equidistance measurement. Of course, I always like to use a multiplier to get a more conservative target. But okay, you can say it's a double top, but I don't say the target is, or the pattern is in play until it breaks below the threshold. That would be your confirmation that the pattern's in play, and in this case, it would be the valley. All right, just a little bit of trivia on patterns. And the same holds true with all patterns have a confirmation threshold. Inverted head and shoulders, of course, everyone knows that's the neckline. Symmetrical triangle, that would be either the top or the bottom trend line. Most of the time, they try to run their way towards the apex, and like I've said before, they do false breaks. More often than not, I have this crazy idea that the first break is usually the false break, and you see that a lot. Not always the case. Okay, what else we want to look at here? All these icons on my desktop are just screenshots that I've taken from saved drawing sets, preparing for my log. Let's take a look at some long-term trend lines. We're back into this parabolic channel we broke down. I was looking, it was looking great for a little bit of a correction, but then, Clam comes out and changes the language to accommodative, really, and I was almost to my rule is greater than 8% to initiate another long position. I got within a 0.5%, just over -7%, and this thing turned around. Thank you, Fed. The Fed giveth and the Fed taketh away. Anyway. So we're back into this trading range here. That's what I'm looking at here on the monthly chart. We can take a look at the same sort of thing on the weekly. At the fib extension of the weekly. That's pretty interesting. That kind of speaks towards, here's a bullish leg here, a corrective leg, and now we're not even halfway up to the leg. This kind of tells me that there is plenty of room that this thing can run. Take that for what it is, but the 50% I would say at 1731 you're going to find tremendous amount of sellers in there. Bound to be some chop and churn going on in there. Let's see now. Let's see. Daily measured move is kind of interesting. It's already passed up the conservative and aggressive targets. This would be the equidistant target, the measurement between here and here, added to this point at 1712. And let's see our targets. We have met the inverted head and shoulder target there, and the next round of targets would be the round top, measured moves, and that symmetrical triangle all around the 1700 area. And let's move into some volume. Let's see. I want to go to TOS for this. Okay, looking at the SPY volume. Let's shrink myself down. We need the daily drawing set here. And let's see here. We have a climax, sell climax here, pick up a volume. Let's get this thing down lower. And these gap ups on lower volume. I'm seeing a decline in volume. We had a little bit of a pickup here, but this isn't anything of note. It's still very thin volume, and we're above the volume weighted average price. This was the symmetrical triangle break on the SPY. I had this drawn in different ways. Yeah, I'll change up trend lines just to kind of, we also, these dojis, you see a lot of dojis on the SPY. That's because it's reflecting the overnight movement, and that's reflected immediately as the market opens. So you see gaps, you see small movement dojis. These are good to look at. I like looking at the SPX, the SPY, and the ES. I get a feel for all the different candles, and I like to just kind of compare all of them. And just for the sake of looking at volume, I'm looking and concentrating on the SPY volume here. And nothing really to note much else on the daily. Just in a, the strength index is just on a tear, reflecting this parabolic move. I think one of the most important things to note is the point of control, the upward movement in the point of control, and I'll go into the lower time frames, is we're seeing a huge pickup of volume. Like this node right here could very well be the next point of control. I'm just seeing a shift upward on the point of controls. Now, being above the volume weighted average, I think initially we'll see a little bit of weakness, and you can't argue with a parabolic move. I'm leaning towards more upside this week. I know, as well as most others know, that the correction is going to come, especially when you get into this trajectory. I keep saying parabolic, but that's what it is. It is going to end badly, and the higher, faster it moves up, the more it's going to come crashing down. Oh, I don't mean crash. Now, I don't want to say the C word, but you know what I mean. Correction is an inevitable thing. The stock market goes up 70% of the time. That means 7 out of 10 years, the stock market's going to go up. Now, we've had a run for 5 years, so maybe that means we got 2 more left. My strategy has always been to buy the bear markets and sell the bull markets. So I'm trying to spread out my long position, and I'm letting a little chunk go here and a little chunk go here as we go up. And of course, I'll be buying on the way down. I buy what they're selling and sell what they're buying. So this is my strategy. On the 30-minute time frame, let's look at this high volume node. Could be our next possible point of control, and this is a 5-day chart. We're looking at some higher volume picking up, climaxing down. First it climaxed up and then down. A little bit of gapping up with some churn volume, and just a look at this long flat base. The market is stamping down, refusing to go down past that, not even down to this volume node. And on the 30-minute, 5-day, above the volume weighted average again here, and climax down lower overall volume to in the weekly session. Our strength index, let me shrink myself. Definitely an overbought territory. This would be the top of the trend if it's going to extend that far. I think we'll see a little bit of some kind of pullback to bring these indications, more into a neutral territory eventually. I'm always learning more about volume as I go along, and volume is not the be-all, end-all, but it is very important to look at. Cannot stress. Almost forgot about the hourly. Just jumped right over to the 30-minute. Here's the hourly. Flat base, stair-stepping its way up. Point of control is shifting along to the highest volume node, and basically confirming the daily that we're up big on really thin volume. Again, our strength index is symmetrically within these trend lines. Well, not so symmetrically, but seeing some kind of respect paid here. And so what does that mean? That means if we get to the top of this trend line, we should see a little bit of relaxation going on, maybe back down to the point of control. Not seeing anything really definite, or again, nothing that stands out as unusual in volume. For the past 3 years, I'm getting used to seeing these moves up on thin volume. It's becoming not really surprising to me anymore. Okay, so that's volume. So where do I go from here? Let's see. We have the volatility index. US dollar, that's important. We saw the dollar climbing, and usually when the dollar climbs, that affects the stock market negatively. Well, that was true to some degree. Now we just saw a huge drop, and initially we didn't see much reaction from the market, but now we have. The dollar affects stocks on different levels, and one of the things that I try to relay is that if you change the value of the dollar, you're changing the value of your groceries, your stocks, gold, everything changes. Now there's a lot more to it than that, but that's how I try to think about it. If you change the value of the dollar, the value of everything changes. So that's the way it is. So okay, so that's all I got for you. Trying to keep the length of this video down somewhat. You can find out a lot more of my methodology, my strategy. Like right now, I currently have some SPY options that I'm using too as an insurance policy to hedge against my long positions, and they're practically worthless now. But that's okay. I didn't spend that much, a few $100. They expire worthless come next few weeks. I'll pick up a few $100 more, and the reason is I $200 is cheap to me, because if the market does correct, that I'll stand to not only protect my long positions, but make back the the outlaying costs on losses on these contracts. I should get that back and then some. So I am expecting some weakness in the next few weeks, but it's looking positive. You can't go against the Fed. Fed says they're going to accommodate, and all hail King of Bankers, Bernanke. The Fed giveth and the Fed taketh away. That's all I can really say about that. So now what I do want to mention though is time to pay the piper. Let's get back over here. And I want to mention, if you like these videos, you want to see more of these videos, then I need you to do me a favor. Get over to hotstockmarket.com and let me know that. In fact, if there's anything else you want me to talk about, any more analysis that you want included in this video, send me a comment. I'm right over here, very easy to find. Go to Hot Stock Market, click Groups, and scroll on down. This is my trading log. Send me a comment. I would very much appreciate that. But that's all I've got for now, and I will see you on the boards.